banks are looking for new ways to boost income and grow market share as new regulations curb the fees they can charge on credit cards and other offerings. Huntington Bankshares, for example, is now offering a free checking account for customers with balances over $15,000. Joining us to talk about it all and that initiative in specific is Steinour. He's the CEO of Huntington Bankshares. Stephen, good to have you here with us.
Great to be with you, Carol. Thank you.
So, Steve, talk to us first of all about the environment, because I think when we look at any of the banks, regional or the big banks, we're trying to assess what the demand is there for loans at this point, whether that's at the retail level or the commercial level.
Well, it's a very competitive environment on the lending side. Banks are looking to grow, looking to make loans. And then on the consumer and business side, there's the consumers deleveraging still as a consequence of the cycle generally. And businesses are starting to ramp up their revenues, so they're starting to have borrowing needs.
So how would you describe it? Give me an adjective.
I would say it's a growing and improving situation for the business community in particular, and I think the consumer's getting healthier.
Do you have a lot of applications for loans that you can give? I mean, I was talking with guys from KeyBank back a couple of years ago in Columbus, and they said they had, demand there, but they didn't have credit-worthy borrowers. Are you seeing that on the rise?
We are definitely. We had a very good first quarter in that regard. Our loans to businesses were up 11% annualized. That was the third consecutive quarter in a row. We grew that segment of our loan portfolio. And we're also seeing consumer borrowing, whether for automobile loans or home equity loans or lines of credit coming back.
So in terms of where we were before the financial crisis, going through the crisis, I mean, where are we compared to where we were just before the financial crisis hit? Are we even close?
We're getting close. We're probably on the 70, 75-yard line now. That's
not too bad.
No?
What about the regulatory environment? How does that kind of cloud the horizon? Does that take you back a few yards? A little penalty there?
Well, it certainly does. It's complicated because there's a lot of the regulation out of Dodd-Frank which is not yet even disclosed. And so it's very difficult to plan a forward scenario with confidence today. We have a new regulator coming in just July. We have no idea what the agenda there will be.
What worries you the most, though, as we wait for kind of the interpretation for you guys?
Well, there's historically there was an opportunity to implement that was paced over time. We're going to try and do in a couple of years what usually would have been done in several decades. And it's going to be compressed, and I think the timeframes will be compressed. So that will require a lot of coordination, a lot of technology, a lot of involvement of lawyers and others to make sure you get it right, and a lot more overhead.
How about
our cost?
That's right.
How about the interchange fee rule? That's one that's been in contention lately. I would imagine that regional banks are getting together to send people to Washington to try and fight that.
Well, there are different banking industry groups, and they've been at that aspect of the Dodd-Frank for quite some time. There's no fresh initiative, at least that I'm aware of, around that. From our perspective, we assume it's going to be implemented as scheduled. We're planning for that. If there is some delay, that will just be good news.
But doesn't it make you concerned? Does it make you angry? I mean, they're trying to regulate, put price caps on your products. Doesn't that jibe with your normal thoughts on what capitalism and free markets should be about?
Well, there's a lot of well-intended efforts to address what caused this crisis that I think are going to have unintended consequences. That's one. So, for example, I don't think the retailers were passed through a Durbin rebate. In fact, we've had a number that have already said they don't intend to. On the other side, the banking industry has created additional fee structures to recover that revenue. At Huntington, we're going in a completely different direction. The approach of the bank and our fair banking philosophy is to minimize fees. In this case, what we've announced today, a free checking account, no minimum balance, no fee, no direct deposit, no required, no debit utilization monthly. It's simply make a deposit, open the account, it's yours free. And it comes with our 24-hour grace, which is an overdraft coverage benefit, no cost, and an ID theft protection for $10,000.
How long will you hold on to that? Because a lot of times banks, or various institutions will do things like that to draw in new customers. And once you get a customer, you can kind of hold on to them often. I mean, do you plan on keeping that policy for a long time?
Absolutely.
You do?
This is a core product. It's a positioning statement for us that we've never discussed, never thought of reversing.
So, but how do you make money then? I
Right.
mean, if they're capping your other fees and you're offering free checking, I mean, where do you...
Is it going to hurt margins? I mean...
It does impact our revenues very significantly. But our opportunity here is to take market share and to do more business with those customers we have. We're a large regional. We have lots of products to be able to cross-sell, and that's our intent. So more new customers, more net customers, more cross-sell, and that will more than make up the fee that foregone.
You have no doubt about that.
That's right.
What about new products? I mean, if I recall correctly, your credit cards were going through Bank of America. Are you going to be offering your own credit cards? Are you going to bring out new offerings for customers here?
Well, we're looking at a number of strategies around a credit card, around stored value, things of that nature, but no announcements at this point.
All right. Well, thanks so much for joining us. Steven Steinour, go Bucks. Did I add go Bucks?
There we go, Matt.
I knew he was going to slide that in there. Steve, thank you so much.
Thank you, Carol.
Coming